of the year is over, and oh, what a half year it has been. A record half year. My name's Lynn Kitchen, and I'm here to talk about where we are now and ask you, how are you feeling about your portfolio? Do you understand what's going on with your portfolio? Do you understand the dynamics of every piece? Do you understand what it is that you're invested in? I am excited to talk about not just what's been going on in the first part of the half of this year, but what we're going to be expecting for the rest of the year, so that you can get on board the Wealth Builders Express with me to really determine if you're going to be prepared, whether you're going to be able to accelerate your progress with wealth building going forward. I'm here to help you with that. Well, let's take a pause. This is a time to pause. It's a half time, mid-year point. And we just would like to pause and take a look at what's going on. Well, the first half of this year has been an amazing time of rising tide. The rising tide of prices of all asset classes. Nearly every one of the asset classes have been rising like rising boats in a rising tide. Let's take a look at some of the actual market new highs that have been going on every day, almost daily. The Standard & Poor's 500 has been making new highs almost every day. The first half of this year went up almost 15% in just 6 months. The Nasdaq up 18%. These are half-year figures. These are the kinds of figures that normally we look toward for the full year, but it has happened just in a half year, in an accelerated time span. The Russell 2000, which is an index of smaller companies, has also gone up 22%. That's not all. The other asset prices, like commodities, the gold price boomed up the first half of this year, up 13%. Silver up 22%. So the commodities are moving up. Oil staying firm. The United States dollar up 14% against other currencies. The treasury bonds have been holding a high yield. We can get 5% on our money on 1 or 2 year maturities. But not all asset classes have gone up. We've seen the real estate index go down by 5.3% in the first half of the year. Well, where are we going from here? And what is it that has been keeping these markets so strong for so long? Let's just take a look at some of the reasons behind this extraordinary market. I think that there's 3 primary reasons that we've had such a strong market that we need to pay attention to. Well, the first one is that the markets have been anticipating lower interest rates. Well, we've heard every 3 or 4 weeks that we should be having a lower interest rate in the future, maybe one cut, maybe 2, maybe 3, maybe 4. There's been an argument, but the trend looks as if we should expect some lower interest rates in the future, and that is what the markets are predicting. Remember, all of the markets are forward-looking indicators, so they're predicting potentially milder inflation ahead, which will point toward disinflation. Okay, the second reason has been very, very strong earnings. So these earnings have been due to a resolution of some of the supply issues that we had experienced in earlier times in the pandemic. But a second reason for these strong earnings has been AI, and AI coming on board to help portend the possibility of future productivity gains so that companies can sustain their earning power is a huge shift in the potential possibility of strong earnings going forward. And then the third reason has been a concentration of the leadership among a few stocks. We call them the Magnificent Seven. Well, these concentration of a few stocks means that the bull market has been led by a few very, very strong companies, and now the rest should be following suit. Well, let's take a look at what this could mean for the last part of this year. My particular investment strategy for the remainder of 2024, based upon my history of being in the market for so long, 34 years as 34 years as an investment advisor, professional investment advisor, an additional 24 years beyond that, managing my own portfolios and so forth. I believe that what we need to be looking for in the last half of 2024 is to stay invested in equities. A rising market will not just fizzle overnight unless there's a particular shock to the market. So the trend is our friend. Stay invested in equities and buy, if you have cash on the sideline to buy, make sure that you're buying only on the dips when the markets come back down. My second investment strategy would be to balance your equities with an equal amount of high quality bonds and making sure that you're receiving solid income from those bonds and that you understand that those bonds are not too far out into the future when you're staying short on the short end so that you can capture the higher yields. The third investment strategy would be to protect the gains that you've already made. And that is, those have specific strategies that professional investors can help you with. If you're not familiar with some of the strategies, if you have tremendous gains in the market so far and you're shy about taking the gains because you don't want to pay taxes, there are strategies that we can help you with. But this is a time that you want to make sure that you are protecting the gains that you have won so far. The fourth strategy is to make sure that you are well diversified. Well diversification means that you are taking advantage of some of the alternate investments, for example, gold, silver, and even the REITs, which stands for Real Estate Investment Trust. As I mentioned before, the real estate index is down. So this could be an opportunity to take a look at the real estate sector because the prices are down. And when the prices are down in real estate, usually the income is up. In other words, it's an opportunity to take a look at how to diversify your portfolio by means of those areas that are lower in price and by also taking a look at gold and silver, which are moving into a potential bull market phase. After going sideways for 3 years, I'm excited about the possibility for those two asset classes. And then finally, fifth, a focus on quality. Go through your portfolio. Make sure you are weeding out all of the weaker sisters, the lesser quality companies, making sure that you only are invested in companies that have strong earnings. Consistent, persistent, strong earnings over time is what will help your portfolio grow over time. So it is the growth, the quality of the growth rate of the earnings over time that helps us build wealth. So this is an important time to stay in the high quality earnings and making sure that this could be a time to look at the small cap companies as well, but only the small cap companies that are evidencing persistent, consistent, high quality earnings growth rate. So those would be my 5 investment strategies for the rest of 2024. And at the same time, things can happen. So we need to be prepared for the possibility that we could have some shocks to this system. We need to expect turbulence. Turbulence happens in even the best times of rising markets. What could some of those turbulence come from? Well, we all know. It's the election that we wish was not happening. The elections are going to be quite turbulent. We have weather patterns that have been historically bothersome right now, and it can potentially be that way the end of this year. Wars are getting much more worrisome, and the potential of a shock, pandemic shock around the world could completely shift all strategies. And then finally, the actual pivot from high interest rates to potentially the first interest rate cut, that actually is a turbulent event. So we'll need to make sure that we are prepared for the possibility of volatility in the price of our portfolios. But what I would like to make sure that you are aware of is to stay the course. We don't want to get emotionally unhinged here. We don't want to get scared. We don't want to get greedy. We want to stay the course. This is an opportunity it's a half year point. How prepared are you? How willing are you to take a look at your portfolio? You should be calling your investment advisor this month, sitting down with him or her, making sure that you are understanding your year-end strategy. And if you don't have an investment advisor, or if you have an investment advisor but you want a little bit of help to understand what's going on in your portfolio, make sure that you give me a DM, a reach out, a shout out, because this is what I'm doing now. I'm helping successful women who have portfolios, who have accomplished women who have portfolios that they want to really start building wealth over time now. And I'm here to help. I'm taking all of my strategies, my possibilities to make sure that you have an opportunity to make wealth by the end of this year, so that we position ourselves well for the next bull market cycle. So I hope that with that, everyone, we will have a prosperous and wonderful, happy end of 2024. Reach out to me. Let me help. Bye for now.